Welcome back to Forex Professional Training in Financial Markets. Andrew's pitchfork supplementary lines and signals will be studied in this session. First type, additional line. In a bullish pattern, if a price fluctuates over the third pivot line, which eventually breaks this line by a bearish candle, then a valid sell signal is generated only if the price fluctuation could not break the line between the first and third pivot lines. The bearish candle must close under the third pivot line. In a bearish pattern, if a price fluctuates under the third pivot line, which eventually breaks this line by a bullish candle, then a correct buy signal is generated only if the price fluctuation could not break the signal line between the first and third pivot lines. The bullish candle must close over the third pivot line. There is a bullish pitchfork on MetaTrader 4 chart that was drawn. Price has oscillated between the line half and the third pivot line. Then it broke the third pivot line and proceeded towards the bottom. Second type, supplementary signal. In a bullish pattern, after a price touched the first pivot line and proceeds towards the bottom, if a gap appears in a market price and the trend continues its downward movement, then a sell signal is generated and a trader can place a sell order with TP price on the third pivot line and SL price on the first pivot line. In a bearish pattern, after a price passes the first pivot line and proceeds towards the top, if a gap appears in a market price and the trend continues its upward movement, then a buy signal is generated and a trader can place a buy order with TP price on the third pivot line and SL price on the first pivot line. Third type, supplementary signal. In a bullish pattern, after a price rises towards the first pivot line, if it does not reach this line and only the high of a candle goes near or touches it and returns to a lower price, then a trader can place a sell order below this candle. Such candles, like a shooting star, shows a tendency of market trend towards the bottom. TP price is on the third pivot line, while SL price is on the first pivot line. In a bearish pattern, after a price falls towards the first pivot line, if it does not meet this line and only the low of a candle, like a hammer, goes near or touches it and returns to a price, then a trader can place a buy order over this candle. Such candles shows a reversal point in a market price. TP price is on the third pivot line, while SL is on the first pivot line. On an oil chart in a weekly time frame, there is a downward Andrews pattern. High price of a candlestick went near the first pivot line, followed by a powerful bullish candle. Price increased and passed the third pivot line. Thus, a trader could place a buy order over the certain candle. A trader must practice frequently in order to be able to detect the additional lines and signals alongside support and resistance lines that affect signals derived from Andrews pitchfork pattern. Andrews pitchfork patterns frequently forms alongside double top and double bottom patterns. Thus, a trader can derive SL price from the Andrews pattern, while TP would be obtained from a double top or double bottom pattern. That concludes this session. Until next time and another session, take care.